Hi, folks. This is Sean Hyman from the Logical Investor, and the S&P 500 still, of course, very overvalued, still with declining long-term technicals, but on the daily chart, let me go to it here. It has broken out of a recent consolidation here, which I'll show you in more detail here in a smaller time frame chart. So we could get a little more upside near term. You'll remember in one of the more recent videos, I said the two most common paths, courses of action is something like this, or some kind of breakout and head fake, and then lower like that. We are still. It's interesting to note that we are still seeing declining technicals on both the daily and weekly charts. We are still seeing declines in things like the Russell 2000 small caps, which continue to have lower highs and lower lows, and declining 50 and 200-week moving averages, and also the Dow Jones Transportation Average, same thing there as well. So that's why a bona fide rally is still suspect. Also, you have to think about, okay, the market's up as I'm filming about 400 points today, but you think, what's that up on? Well, it's up on the thought process that China will resume trade talks in October. Okay, so that's a month away, and it's rallying today off that. And also, so far, every talk that they've had thus far has amounted to nothing. And so far, even the stuff that they have agreed to, they haven't made good on. So to me, that's the dumbest reason in the world for the market to rally. Also, ISM services data came out over the last day or two, and so that's the services sector. So you've got services, which is what most of the economy works off of, delivering a service in America, and then you've got manufacturing, which is a much smaller part of the U.S. economy, and of course manufacturing just the other day, last day or two, it went into contractionary levels as it went below 50 on its readings. So anything below 50 means contraction. Anything above 50 in their readings means expansionary. So that went into contraction, and the services sector is consistently slowing down over the last number of months. So the economy is slowing down. The global economy is still slowing down, and there's still so many landmines. So it's really almost humorous that the market is up on really nothing more than a possibility of China doing something in October, which is not even likely. I mean, they're this close, and China is so long-term oriented. It wouldn't surprise me if they wait to make a deal until after they figure out how the next elections go. So anyway, a lot of weakness there in markets. And then what I was talking about, here's a blown up version. This is the 4-hour chart. So each candle on here represents 4 hours in time. Here was that consolidation on the S&P 500 that we looked at on the daily chart. This is more of a zoomed in look of that. So it recently broke this kind of ascending triangle formation, and so we could see that the first thing this will likely rally up to, and before it reaches much resistance, is the last two sell points. So when you look back on the chart and see when were the last times where the heavy selling really came in, it was at about the 3,000 to 3,020-ish area. You could also maybe 3,025 or 3,030. I mean, it's a real hair splitting, but basically right in that zone was the last couple of big dumps of shares that you got from large institutions and things like that. So that'll be an interesting area to watch. If the pattern holds true, then it's measurable, and you can take this distance and project it up from there. And if that's the case, you would actually go to new recent highs and then head lower, which goes back to this example that I had here. Let me draw it back out, where you go to another high before you go. Because remember, valuations are still extremely high, and that has not been resolved yet. And so, why should values be high when there's a number of companies reporting earnings misses right now? There's excessive volatility, global economy slowing down, U.S. economy slowing down as proven by manufacturing and services slowing down. Still a big question mark with China, and if there's some deal with China that does come through, it's likely a temporary boost to stocks because one, you don't know if it'll stick. Two, stocks are only likely to rally so far because they're already stretched and overvalued. So if stocks rally up higher, all that means is just got to a riskier, higher point of overvaluation, which means the sell-off and contraction from that will be even worse at some point. So, again, not a good sign for the overall market. And then also, if stocks are such a great place to be overall, like is in the S&P 500, Dow, NASDAQ, etc., then why have metals just been soaring lately? And so gold's been soaring big time, and of course we're getting a decent sized pullback today, and we should. I mean, we're getting far away from the 200-day moving average. The daily technicals are softening a bit or something, so we could get some volatility there to the downside, but we're still in an uptrend. But just know that in metals, or really any asset, but particularly in metals, with the very volatile nature of them, you could have some kind of sideways consolidation that lasts for quite some time before heading higher. That's one scenario you could have, and that's sort of like where this was a little bit of a dip. It was you had this, which was almost more of a sideways consolidation before you got this. And of course, you could always get a temporary pullback, and go higher, which I don't think is as likely. The more likely is either the sideways and then up. And that sideways, sometimes that lasts for a while. I mean, March through May, was this last one before it took off again. So just know that can happen again. If you get a sideways range scenario. If you get a three-wave pullback, then you could get something very volatile. And I'm not drawing exact levels here or something like that, but you could get something very volatile with gold before you end up heading to higher highs. So just know that, because people get excited about upside volatility, but sometimes they forget that there's downside volatility as well, even within an uptrend. So there can be, massive moves, and that can be, quite quickly. So just know that, and the further it gets away from the 200-day moving average, the more excessive that volatility can be. But don't forget that, most recently this went from about 120 to, 146.82 in, 2 or 3 months time. So, of course, it would be normal for some profit taking for traders who are in that move to take some profits, which causes these temporary pullbacks and things of that sort. So just know that would not be anything abnormal. But very bullish on gold. Like I say, it'll probably be our last metal holdout that we have as this metals rally has been going on. We have started to peel off pieces of it with GDX. We peeled off GDX a little while back ago, and whether it goes higher or lower, I'm glad that we did. Many of you made 20 to 50% on this one, and right now it's let me take a look. Yeah, 29.47 is where we got out, so it's a little below where we got out, but the whether it goes higher or lower, its downside risk potential is huge, and its technicals were starting to diverge, and so I wanted us to make sure we locked in and didn't let some big massive gain like that happen, and us not be able to ensure that we captured it. So the bird in the hand you have today. You don't know the two in the bush that you may have tomorrow. So because everything we deal with is statistics and probabilities and likelihoods and things like that, but nothing is a guarantee. Nothing. So and over time, as we look at things like Elliott waves and stuff like that and all, we will be right more times than not and statistically move ourselves forward. But in any one isolated individual stock or ETF event, you don't know in the near to medium term what will happen. So you could have a run up like this and be up so much, and then all of a sudden, you could have some kind of whatever bad gold news or some kind of thing, something come out that was a catalyst that causes it to drop like a rock in the near term and lose all that upside gain. And yes, at some point it might go higher or whatever, but you want to ensure that you have those massive gains when you got them, particularly when we have other metals positions out there like GLD, SLV, and PPLT. So, matter of fact, while we're in the mood of metals, let's just go ahead and look at them all in a row. So SLV down 4.36% today. It's more volatile than gold to the upside, and it's more volatile than gold to the downside. Yet the trend is still up, high, higher low, higher high. But look at it; it's a mile away from its 200-day moving average. And there's been a lot of gap ups here lately. Gap, 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 gap. So that's a ton of overzealousness in the market. The media's been all over it lately. The gold rally, which they're always late to the party, but it's like you can hear the drum beat and it gets louder and louder and louder and closer and closer. And it was like it got overdone. And then, of course, you see the gold and silver commercials, are more common on TV, and that happens when gold is rallying. So it's almost like that the focus on metals had gotten so overdone that it was about time for the next pullback to happen. And so I warned about that recently over the last few days, but again, I warned about it yesterday, and we are seeing some of that happen right now. So, and again, we know to expect that, because anytime you get the price a mile away from its 200-day moving average, the possibility of a massive volatile pullback is there. I mean, look at how far it even is from its 50-day moving average. And not that, metals can do that, and they can stay that way for quite some time. But that's always an indicator to set your expector in your mind, your expectancy for the potentials for pullback. Sometimes you'll get them, sometimes you won't. But if your expectancy is that if you got a volatile pullback before heading higher, then if your expectation is that, then you're not shocked at all when there's a good sized pullback. Because remember, anytime you have very volatile upside, and I would call this very volatile upside. We've come from the 13s and 14s up to 1835 in 60 days. So that's massive. So if something can go up like this in such a short time frame, it can certainly have some type of massive correction, big percentage-wise downside before it, heads to higher highs. So just know it can do that. Does it have to do that? No. Does it have to be that deep? No. But it fully can be that deep, and could easily justify it just off the way that market mechanics tend to work. And so, so if it did, just be aware that can be the case, because I don't want you attaching your emotions to a price and riding it like a roller coaster and getting overly excited here and then getting almost depressed if something were to go from 18s to 15 or something like that, and you're like, oh man, gave back almost all our gains when we were up X amount or whatever. But just knowing that this is still in an uptrend and that the next push higher should go, even higher than this. I'm looking. So let me back up a minute. So gold here, really, I'm more so than watching GLD, which I am, and I'm watching its previous resistance zones in the anywhere from the call it 150 area to the 174-ish or so area. So so one thing I'm watching is this zone of resistance right in here as this heads back towards the old highs. But I'm also watching, because one thing that's going to affect gold and how far it goes up is how far the market overall goes down. So that's one reason why, I will be more apt to um, hold on to gold probably longer than we even do our silver and our platinum position. But I'm fully expecting, uh, the market to correct. Uh, Ultimately, I expect it to have a massive correction, something very deep. But in the medium term, it wouldn't surprise me if it did something at least like that. But depending on how deep the market correction goes, will depend upon how far that gold likely goes up. It's likely going to be a big factor in it. In other words, silver, what I'm watching there on SLV. Now remember, SLV and the price of silver per ounce are two different things. One's in ounces, the other's in dollars per share rather than dollars per ounce. So they aren't the same price. So just know that, but they're headed the same direction. So SLV, I'm looking at the 19s because here was the last major selling point it had here. This is ABC, and this is wave 1, and this is wave 2, and we are in wave 3, so this should have no problem eventually surpassing 1971 here. So, this could go into the 20s, but I'm watching it, and we're up so much on it that, and what we will be up on it when we just get to 19s, the 19s, that I'm contemplating possibly selling that to ensure that we keep that as well, since we will have platinum and gold still in the legs in the metal rally. PPLT has just PPLT's gains in the near term have just been insane, going from a little over 80 to a little over 90 in no time. I mean, in just over 30 days for us. So this parabolic move and rally has been amazing. On one hand, ultimately, this should do well over time. It's broken a long-term downtrend line here, and it's broken above its 200-week and 50-week moving averages, starting to get a lot of buying coming in, improving technicals as MACD and both RSI are heading higher. On the other hand, this has rallied so much in such a little time that if the next rally higher came fairly soon, we would possibly take profits on that. Why? Because if something happens and you get a 18 or 20% profit in 40 to 60, 90 days, something like that. In other words, something that's normally a year or two's worth of returns in 60 days or some kind of thing like that, you should probably take it. Because it's an unusual move that probably has with it at some point an unusual correction lower. If we get the unusual correction lower first, then that probably pushes us out a number of months before we get to our next multi-month and multi-year high, or well, more like multi-month high. And if so, that may of course change the dynamics of things. Let's look at PPLT on the daily chart. This one, of course, is just shot up. I mean, both silver and platinum, we happen to catch a near-term bottom. Again, nobody can say they did that purposely. Obviously, we try to time things as good as we can, but nobody's ever going to be able to commonly ever get that accurate. So I'm just thankful those took off so well so fast in the near term for us like they did. But this is just soared, from 80 to 93.47 in a real short period of time, 30 days or so. So let me draw this out because it's going to be easiest to draw and show than it even is to explain. So if something happens and we get some temporal pullback and then go higher, we're probably going to sell, because that's such a massive return for its time period that's not even funny. And you risk, something much deeper happening before going back higher again, and that could take many, many, many months for that to happen. of course, there's always the possibility of sideways consolidation before heading higher, and that itself also could take many months. So either way, a deep dip and recovery and go past it could take many months, and a sideways move, which is 5-wave sideways, would likely take many months as well before heading higher. So if we get either one of those scenarios, we would still probably, I would still consider taking profits at a very generous gain in, mere months' time. But if for any reason this is just a shallow pullback and another push higher, we'll probably be out of that one and book some more great profits. So on going back to platinum PPLT, it's got a couple of areas of resistance that I'm looking at. The last major point where it sold off was here about the 113s, but it also has a lot of resistance here in this 95 to 97-ish area. So, we got up to whatever I said a minute ago, 93, 94, whatever the other day. So that's another reason why if it pushed into, closer back to that 95, 97 area, whatever, we would probably take profits in the LI portfolio. Now, if you are holding silver or platinum from a previous portfolio and you're not presently profitable, I think both of those are fine to hang on to. It's just what we're doing is compressing time in LI with these huge returns in such short amount of time span. We're capturing and compressing that by having these huge gains in such a short amount of time. But if you're unprofitable or mildly profitable because in UWR you got into them and you're still not profitable or barely, you can definitely hold on to those longer and allow more of the trend to come about and gain profitability that way, even though that'll probably take a little longer. Both assets are obviously needed and haves to haves type of things in the economy, and the downtrends in them have been going for so many years that all in any speculation and overvaluation or overvaluation has already been wrung out of it to where it's very undervalued, and silver and platinum are very undervalued relative to gold even, and I'm sure that's why we're seeing some of the big pops that we're seeing in both those two in such the near term. But so anyway, I have no doubt over time this continues to head quite a bit higher. Question is, how much time that takes. So if you're at a higher break-even price, you want to allow it that time to get profitable on those before ever selling out of those, because there's no need to not do that. But if you're in the LI portfolio and this is the first time you bought it, or you have an averaging down between your UWR days and your most recent purchase to where you're profitable now by a decent amount, then that next pop higher, and when we give the sell signal, you might consider getting out of it then. So, sometimes people will see me give seemingly one direction to one person and another direction to another person concerning the very same stock. And while if you don't think it through, you could think, well, it sounds like he's talking out of both sides of his mouth, but it's not. For instance, I may be talking to one person and they've averaged down and they're up 20-something% on the asset. Well, yeah, my thing to them would be, you might want to consider taking profits. Might go to the next person and they say, hey, I'm up 2% on this same investment. Maybe they got into it later, maybe they never paid attention and averaged down or what have you, and they're just barely up or mildly down. I'm not going to tell them, that there's to consider selling, because there's no need. So just there's some common sense in it that we've got to remember that everything is relative. It's relative to where you as an individual are in that investment. If somebody's up, 50% and another person's up 15% due to averaging downs and when they got into a stock or ETF or something, way different information coming from me as to far as what they should do than what the other person will get, because it's relative. It's relative to where you are in the investment, not even just where we are in LI, because some of you have, will always have varying returns. Part of it's depending on how much time and you're putting into LI, and how much you're paying attention to your own portfolio, and to also the weekly videos and the commentary that I put in the fundamentals news and chart section and premium newsletter section in the community comments area. The people that pay more attention in those areas tend to be aware of averaging opportunities to make sure they get those in, and they tend to have 8, 10, 15, 20% more returns than those who don't. And so I would urge you to pay very close attention, because what else in life is going to pay you that kind of margin more than your regular return? Almost nothing. And what's going to in your life is going to give you those kind of returns, period, is almost nothing. So it's worth time well spent. The person that says, well, I don't have time to do it, that's a lie, and that they're lying to themselves and to others. What they're really saying is, I haven't prioritized it to where it's become high enough priority to where I've made time for it. That's the correct answer. And so things that can increase your wealth, which increases your influence and increases your power in this earth to do good, to help, to influence, to sway, to persuade, to meet needs, to advance the kingdom of God forward, all those types of things, that's worth your while. That's worth your time. And so you want to assess your time and say, what am I putting my time into? Is it something productive? Am I, just piddling away my time on needless, stupid things? Or am I, focusing some of my time into, what some people call MMA, money-making activities? So it's not the mixed martial arts, that's the money-making activities. And the people who focus on that more are making better use of their time. And money is power, in the sense that it empowers you to do stuff for you, your lineage, your church, the kingdom of God in general, missions, evangelistic outreaches, helping the needy, helping your lineage long after you leave this earth. That's all time well spent. That's moving the needle type stuff. So never lose sight of that. All right, so that's our metals and a little bit about them. So let's back up and go back to some of our other positions. FXB has recently finished its latest down leg, and I say that because it has broken this. You've got this ABC correction lower here, and when it breaks above that latest leg, that's usually when that's over. Also, you've got things like the MACD breaking a downtrend. You've got your selling volume, which has gotten a lot lower. You've got your RSI picking up as well, which are all hints also. But with that said, that doesn't mean that this just goes straight up from here. You can have pullbacks before heading higher. Next resistance is probably this 200-day moving average. This region could be a little higher right at, or a little lower, but somewhere in there is probably its next point at which it has some resistance. And but eventually, I believe that it will go up into new highs. So funny thing in the UK, they voted to leave the EU, the people did, and then their politicians are fighting a tooth and toenail, digging their heels in and making everything hard about it. Then they get May thrown out, Boris Johnson put in, and he's trying to go forth with what the people voted and said they wanted, and now their parliament is trying to take all the powers away from him to be able to do that. And so there's just a crazy back and forth thing that's going on. And but I believe that the worst is likely already baked into the pound, and we're ready for the next leg up. So very, very bullish on it over time. Then we have got EWW. You're going to see a theme, which is the latest pullbacks are likely over and ready, or we're in the next rallies for our positions that have had the pullbacks. So here was your rally up, here was your three-wave correction lower. Now we're into the next rally up higher mode, I believe. Now, with that said, obviously there will be pullbacks along the way as we head higher. So just know that that's more probable. But things I like: selling volume continues to decline. MACD has broken a downtrend line, it's heading higher. RSI is strengthening again. So I'm looking for this to push to higher highs than what we saw right in here. And by the time we get back to about 52s, 53s, you should be way up on your money because of the averaging downs that you've gotten into. So again, very bullish on that. And there's also a lot of general strength coming into emerging markets in general. So like you've got EEM, which has been putting in higher lows, and you've had your latest major three-wave pullback and minor three-wave pullback happen, and that's been broken to the upside, and so we're likely starting another leg higher there. Selling volume continues to head lower. MACD buy signal, RSI strengthening. So you're starting to see some more strength come into emerging markets in general. Former positions, EIDO, likely its last down leg is over and getting ready to go into another high. TUR, has rallied significantly up, had a three-wave pullback, bounced around the 200-day region, and is heading higher. It's broken this downward channel as well. Higher MACD, buy signal, etc. So it's looking good. So there's just a lot of emerging markets that are firming up. RSX, higher highs and higher lows. Its latest three-wave pullback to a higher low is done. This is broken, and this is likely getting ready to go for a higher high. So just a lot of broad emerging market strength and inflows, and that's helping EWW as well. Also, let me see if I can show it here. So you have had the Mexican peso for many years had grown very weak to the dollar. So as the peso, so this is USD/MXN. So as this goes up, the dollar is getting stronger versus the peso, or you could say the peso is getting weaker relative to the dollar. And so that pulled back some, but it's been in kind of high consolidation where it's still been around the high 19s to low 20s area. So that's kind of weighed a bit on emerging, on this emerging market, and I'm looking for this to eventually head lower to where there's a lot of strength there in the peso once again. By the way, one that has climbed back to overvalued and high levels again is the dollar versus the Brazilian real. Once it gets back to these high fours, 425, 417, 421, 419, etc., are very lofty levels for Brazil. And so while this could go higher over time, near term, once this pushes lower, that can really help former picks like PBR and stuff like that as well. Also, for some of those previous oil picks, since I'm on the topic of oil, here was your ABC downtrend. So here was your bottom in oil. And so what that means is everything else is an uptrend. So from 2016 higher, you've got an uptrend, but you have pullbacks along the way. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5, etc. So this is either the bottom of Wave 2, or we've got a deeper three-wave that happens or something, maybe even deeper than that, before heading higher. So wave C was your bottom of your downtrend, which means you're in an uptrend, even when it doesn't feel like it when you're in wave 2 pullbacks. So people think that oil is so suppressed in the 50s, but you got to remember it was in the mid 20s or 2605. So it's still double off of its lows what it was, and it's getting ready to go higher. But the thing about, if you listen to the news outlets and the media, is that they will talk and dog oil as much in wave 2 as they do in wave C. So, and if you're in the easiest and biggest ways that you can screw up as an investor is in wave C and wave 2. So when have I had the most questions about oil stocks and doubts among my own subscribers? Wave C's and wave 2. If you notice how many questions have come up about older oil picks more recently, and when has that been? Wave 2. And so if you don't think that Elliott waves work, believe me, you should, because at some point, some of you have become the epitome of the sentiment that is in those waves. So your job is not to join the sentiment of those waves. Your job is to acknowledge and see what those waves are in and know what the masses are thinking, and you think the opposite of what those people are thinking in those waves. So at the bottoms of wave C's and wave 2s, people are extremely bearish, and that's when you should start to salivate and get extremely bullish. So so don't be led astray by by things like that. Also, one of our, and so I'll kind of skipping around here, but one of our ones that we had one subscriber go a little ballistic on this week was LPL. And what is this end? This is I mean, this could be, it's hard to say what the ultimate pattern is, but you've got 5 waves down and a leg down that is a lower low, so that's probably a C wave there. So in a C wave, what do people do? They lose their mind. What are they doing in wave 2? They lose their mind. So occasionally, I even have subscribers, for whatever reason, because I've taught them for years, and I talk about the emotional, psychological side like a broken record, and there's a reason why. It's not because I don't have anything else to teach. It's because it is the number one way you're going to screw yourself over as an investor. So if you don't keep that in check and remain rational, and even much as the newsletter is called The Logical Investor, I still have some subscribers get very illogical on us, and then when they post all that crap on the site, all it does is encourage newer investors to get overly emotional as well. So your emotionalism is contagious like a cancer, and all that does is hurt other people's faith in their stocks, and also makes it more apt to where they'll make bad decisions and join that group 3 that I talked about, where they'll start off going off of my advice and then later on trust their own thinking, their own emotions, and they'll sell out based off of their own advice in their own head, which is inexperienced, emotional, and irrational, rather than professional advice, tenured advice, and unemotional advice that is rational and numbers based and well thought out. So you when you do that, you help others in this investing community to go down the tubes with you. So rather than get emotional, rather than jump to conclusions, you should ask questions. So one person went off the reservation because they saw NA on the fundamentals, and they thought, oh my gosh, the company doesn't make money anymore. Well, it doesn't mean that the company doesn't make money. NA means that Yahoo Finance isn't paying for a foreign stocks all their data, and that's all it means. Had the person asked, that could have been resolved and they'd never gotten emotional. Instead, they jumped to their own conclusions, got all emotional, and then got all emotional on the site and stirred up people. Like, we've got one guy that's only been with us for 1 or 2 months, and he's and then he's got all these concerns because he's seeing all this stuff put on the site of a subscriber getting emotional. Again, I'm not picking on him, because anybody could do this, right? Anybody could allow themselves to get this way So let it be a learning lesson when you see stuff like that. Let it be a learning lesson to that person. Let it be a learning lesson to others to stay on the logical side of things. So, and I don't know how many times I've done this on this particular stock alone. When this happened, who'd have thought this would happen? And when this happened, who'd have thought this would happen? And when this happened, who'd have thought this would happen? And when this happens, who'd have thought this would happen, etc. So, what a stock has done has no bearing on the future of what it has to the ability to do. And these are big percentage drops, 18 to 8. So the person said, I'm down 50% on this stock. So it gives you opportunity to have your 3 averagings down. And remember, how does value investing look? Value investing goes down throughout most of the time that you hold it, and then has almost all of its gains on the last little bit that you hold it. And sometimes it goes down and then sideways range for a while, and then up, in the last little bit that you hold it. So almost all of your gains are in the final so many months to year that you hold the stock. And what it did in the interim here had no bearing on this outcome coming about. So I've taught that many times too. So again, if you remind yourself of the teachings that I teach literally every 7 days, it will help you. So for stocks that we hold for an average holding period of 2 to 4 years, and I talk to you every 7 days about them, there's no reason to get emotional about stuff when you hear regularly from me about this stuff. It's why I do the weekly videos. It's the hand holding period, so that you don't do anything stupid between when we buy and when we sell. And so there are times where I'm a little more blunt. There are times where I'm a little bit more harder hitting and hopefully sobering your thinking. And so when there's a bunch of irrationality hit on the site, just know I'm going to come back with some sober thinking, some strong words, not mean words, just strong words, and to try to sober up your thinking to get you back from emotionalism back to rational thinking. There's no guarantee I can do that. All I can do is try to encourage you to do that, and if you choose to do that, you do that. But don't be with me all these years and then not learn how to be a statistics-driven, probabilities-driven, numbers-driven, logical investor. So anyway, enough said about that. So we did FXB and EWW. So we just covered LPL. Again, LPL had a recent contract that they got from Apple for displays and stuff like that for their phones and I think laptops and different things, various devices. That'll be good for them as well. But the reason why this goes a little deeper is because it's right in the crosshairs of the trade war, which trade wars and tariffs won't last forever. But they are a South Korean company that makes products for countries all over the world. So when there's trade wars and tariffs, that hinders that process. So that's why you should never be shocked that something like that happens. But also, let history be your guide and never forget that massive, shots higher can happen on the backs of that as well. So sure, this goes from 19 to 7. It also goes from 7 to 18, and from 10 to 17, 18. 18 back to 8s. That's a big percentage drop. Now, so the person that's just fixated on, ooh, that's a big percentage drop, I'm down X, well, they're going to, panic and be emotional, and they're not going to be around for when it goes from 8 to 17 again. And for when it goes from 17 to 5s, and then goes from 5s to 14 or whatever, again. So emotionalism just does not help anybody. It is not your friend, it's your enemy. So matter of fact, the times when emotions are the greatest, and when people do the most selling because they think they're right, they couldn't be more wrong. If you'll just go back on most charts that you see, so we'll just start with this one, and you look at the highest selling points. So they were selling right in this region. Should they have been selling in this region? You know, at 13 and 14 when it goes back up to 19, 20 through here? No. One of the next highest times they're selling is right in here. They're selling at $7, $8, $9 a share, and they feel that that's what they should do because after all, this stock is never coming back, right? That's the way they're feeling. This is never coming back, and so their feeling is confused with fact as it drops from 1890 to 738. And then lo and behold, what happens if they would have just held it mere months later? It would have gone from 7s to 13s. And if they would have held it about, a little over a year later, it would have gone from 7s to almost 17. And they're kicking themselves because they were emotionally engaged here with the stock. They tied their emotions to what the price was doing rather than what the company was, which are two different things. Because stock price can do anything in the near to medium term, and it has no bearing on what that company is ultimately capable of or valued at. And if you think that, then you think stocks are fairly valued all the time, and there would be no value to ever be had. Stock prices are freaking erratic sometimes. As you can see, this is one of the prime examples. And also, here's another thought to not forget. As stocks get cheaper, their percentage differences will be greater. So expect that on the biggest parts of your decline, the percentage drops will be quite a bit more severe than they were in the earlier drops. So when a stock drops from 14 to 13, that's a $1 drop, but that's one level of percentage. And when it drops from 6 to 5, that's another level of percentage. So you're never going to be right by your thinking of, oh, I'm down X amount percent on this stock by having that type of thinking, because when something plummets and gets cheaper per share, every dollar that it drops, that percentage drop is quite a bit bigger, and that has no bearing on what it's going to do. I mean, this 7 to 19 here over the course of these few years here, this 8 to 17 over the course of these 2.5 or so years here, these are massive pushes higher too, both price-wise, dollar-wise, and percentage-wise. And if you were coming off the backs of these drops, you'd have never thought that these would happen. And that's a novice mistake, is to think what has happened will always happen, whether it's on the upside or the downside. You can't talk when stocks are flying high, you can't talk people out of them because they think what is happening will pretty much always happen, or at least happen for a very long time. And when something is diving, you can't get them to think that it's going to ever end either. They just think, here it is, it's on its way to zero, never coming back. And those are just extreme ways of thinking caused by emotionalism. So, on to our next one, BBBY. Here's another one that people have gotten emotional over. Two reasons. One, it's a cheap price stock, so any move downward is a big percentage. And the other is they listen too much to the press and the media and stuff like that. And the other reason is, what wave is it in? C. A, B, and we're still in C because these lows went lower. This is still C. So when are even my subscribers most apt to make the dumbest decisions? In wave C and wave 2. And now if you listen, you won't. If you follow the instructions, you can't. But you can't make the dumb decision. But if you don't listen, if you go to trusting your own judgment or the media or how you feel or what you're reading or online or hearing in the news media, you're probably going to make a dumb decision. So their selling volume heads up to here, just very slightly lower there, quite a bit lower there, and more recently has been a whole lot lower. You've got your MACD continuing to head higher. You've got your RSI oversold coming out of that. So this wave C is so long in the tooth. 1, 2, 3, 4, almost 5 years, that it is likely, likely about over. And then the selling momentum is also slowing a bit, which you can see from basically that right there. That was the steep part of the sell-off, and now it's more, it's the selling is not as steep, because what slows the descent of selling? Buying. So as buyers come in and as selling decreases, that starts to change the angle of it all. And so, you will eventually see that happen. So, again, very bullish on BBBY. By the way, on LPL, it's moved from 5 to about 6 in just a very short period of time. BBBY is having some big moves, because the shorts are getting their butts handed to them, because this is a heavily shorted stock, and so now they are on the wrong side of their trade. And this has broken this latest down leg here. It's broken above the 50-day moving average. It's 6.24% up today. Your selling continues to head lower. A lot of your biggest spikes are buy spikes. The MACD is at a buy signal and perking up a bit. RSI is perking up a bit as well. So obviously, do expect some good sized corrections along the way, but I'm looking for this to head higher. So I believe its latest correction is likely behind it. Probably the same for LPL as well. It's a little early to say that just yet, because that if you look at the very steepest part of this move, then you could say yes. If you're looking at this, then we're right there at it. I would like to see it break and hold above that corrective line right there, and then we'll likely be able to say that that last down leg is behind us there. Here's the big ABC correction lower, which is likely over said and done with. Also, it kind of held the line in kind of a double bottom here. Also, notice that your selling volume is getting less. So even though this went down here, selling volume was a little bit less. Even though this went down quite a bit here, selling volume was even less than here. So that continues to decrease. So there's little things that experience teaches you that helps you along the way. And if you're tapped into it, you'll listen. I got one comment, well, I don't follow anybody blindly. Well, following your own self and your own pace is the slow pace to get there. So, and usually in some aspects of life, you are following people blindly, whether you realize it or not. But if you're going to trust somebody, I would say it's somebody that many of you have been with for 5+ years, and you've seen the system, you've seen my track record, you've seen my thinking, you've seen my integrity. So if that length of time doesn't tell you something, then I'm not sure what's going to convince you of it. So, again, that's, sort of a rational thinking that was floating around the site with, a person or two, and just don't join in on the emotionalism when you see it. That's all I can tell you. Because unfortunately, I'm never going to have 100% participation of everybody following everything they should, because people are people, and people are going to make their own decisions, and they're going to decide whether they're in group 1, group 2, group 3. And if you don't know what that is, go back and read the latest newsletter. But group 1 basically follows everything that I say to a T. They buy when I say buy, they sell when I say sell, and they don't do anything in the interim except for averaging down at the points that I've designated. Group 2 says, well, Sean's pretty good, but I'm going to tweak his system. I'm going to play around with it. I'm going to, wait for this. I'm going to not follow this rule here. They kind of, they follow it somewhat, but they don't follow near as closely as they should, and their returns usually reflect that. And then you've got the third group that starts off wholeheartedly following me, just like a group 1 would, but then there's somewhere along the way where they switch from logical to emotional, from logical to irrational, and they begin to trust their own instincts, their own emotions, their own thinking that didn't get them where they wanted to be in the first place anyway, which is why they're with me, which is why they're paying a subscription fee and now not following the advice. How dumb is that? So what you're really paying for is my 25+ years of experience of watching markets, and that maturation of investing thought and philosophy and being and all those years of studying fundamentals, technicals, sentiment, combining all that together and getting the edges from all of them. And again, and you should see that proven out over time. But that's what you're really buying when you're buying that. So not to follow that is as dumb as me going to the doctor saying, I've got a pain here, and he says, oh, I know exactly what that is. That's this, and here's the medicine that you need to correct that. So let's get you this pill, these antibiotics, whatever it is, and have you take that. And so I've paid him for his office visit. I paid him for his time and experience. I paid him for his schooling. I paid him for all these cases he's seen before and diagnosed and cured. And for me to go and say, well, no, I don't think that's the case, or, well, I think I know better, or whatever, is just dumb because it's did I go to the school through all the schooling? Did I have the internships? Did I have the experience as a physician? Have I seen that many cases of XYZ, whatever it is? Do I have that in-depth knowledge of what each medication does and the things that it helps cure and all that? No, I don't. So I'm going to have to, guess what, blindly follow that doctor because I'm not a doctor and I don't know those things and I don't have anywhere near that level of experience. Now, I could be dumb and I could say, well, I'm not going to trust his experience. I'm going to figure it all out myself. And guess what I've got to do? I've got to study like the doctor studied. I've got to take the length of time that the doctor took. And I've got to spend, countless amount of money to figure out what he did. Or I can pay his office visit and gain all of his experience and all of his knowledge as it pertains to me in that particular instance and benefit from it. Now, which is the fast road and which is the slow road? Which is the wise road and which is the dumb road? So, so consider that. So CAJ is another one following the theme of the latest leg lower is likely over. Here was an AB and long C, or it could have been an A, B, and C, either way. That decline is over, as we can see here, likely bottoming and getting ready to head higher. Also, your biggest sell-off was here, then it went to here, then it went to here, and now they've been even, now they've been even quite a bit lower, even more recently. So the selling volume keeps dying down, which is a very bullish sign. And then we're also roughly, in a kind of a somewhat of a double bottoming here on the daily. RSI is heading higher. MACD is at a buy signal. Broke its last leg lower, etc. So lots that I could say there about CAJ, and I believe it's on its next major upturn as well. So liking what I see there. Keep in mind there's several of these stocks too that while we are waiting their next rallies and stuff like that, you're still getting. There's a number of our stocks that have 4 or 5% dividend yield, so you're don't lose sight of the fact that you're gaining that as well while you're waiting. So CAJ, massive selling here, much less selling here when this dropped here. It's like less than half of what this was here, so that's a good sign. MACD heading higher, RSI continuing strengthening. So I think we're starting to see a base building period happen here with which to launch higher from that. So again, still bullish on this stock long term. E, ticker symbol E. I showed you earlier that oil was in wave 2 and looking to go into wave 3 later. That wave 3 is going to lift this back to a sell level over the coming months to year or two, and that's going to be a really nice run. I believe its latest ABC 3-wave pullback is likely over. Again, continuing with that theme of the ones that have pulled back have likely finished their latest decline. There, I believe, is your proof of that. MACD buy signal, RSI has been strengthening, etc. So, of course, there will be, pullbacks along the way, etc. But ultimately, I'm looking for this to, head back really nicely up here. And so, I believe we'll do well over time, especially with you having your averagings in. We already went over silver. We already went over platinum. So we will go to CHL. So CHL, probably had its bottom here, this kind of a V bottom here. There's several things that indicate that may be the case. While this has continued to drop, your selling dropped just a little bit here, but it's dropped, quite a bit as you get to here, and then more recently it's been even more tame. So you've got MACD buy signal, RSI has been strengthening. So I'm looking for this to head higher overall. With that said, we could have some pullbacks along the way before we get there. But as this rises back to towards our original entry price, since every single one of you should have your averaging down in, and if for any reason you don't, you should get that in, so that when it returns to there, you will have your profit on that, and we will exit it. So that is it for this week. Again, we discussed a lot, so I hope you really let that sink in and take that to heart. And thanks so much for listening. And again, when I get a little sobering, when I get a little hard, when I get a little straight talk and kind of hit you between the eyes, it's not me being mad, it's not me being mean. It's there's times with and y'all are not my kids, so this is where the example doesn't hold true. But think about with your kids, there's times where you can be sweet and lovey-dovey and everything's all cushy and a bed of roses with your kids, right? And you love them then, right? And then there's times where you have to have straight talk and you're kind of hitting them between the eyes, so to speak. And do you love them just as much then and care about them just as much then? Of course you do. Now, they may perceive you as being a little hard or mean or insensitive or overbearing or whatever. They may view it that way, but we know that to be an immature way of thinking. But from the more mature parent standpoint, we know that is just as much love as the mushy-gushy stuff, right? So sometimes you will see me, depending on how subscribers are being at the time, which usually, unfortunately, has to do in conjunction with wave counts, C's and 2's. Even though I teach the emotions and sentiment in those, it's like they forget that and they become the sentiment of those. So but it's in those times where I will usually have to change how I'm being in my approach, just like the kid that you can't be lovey-dovey with and you got to have some straight talk with at that time. There are the times where I've got to be that way with subscribers. And again, do not take that as being calloused or hard or mean or insensitive or not loving or whatever. It's loving you in the way that you need it at that moment. And so I forget how one subscriber said it today, but he said the advice, the biggest advice that I need is the advice that I didn't want to hear, but take it anyway, or something like that. Again, I'm probably botching that, but it was in the comment section today, and I thought that's very wise for them to say that and to acknowledge that. Because a lot of people, what they're looking for is agreement, and they think agreement is right and wisdom. So if I think this way and you're confirming that by thinking this way, they're thinking that is right and the agreement is what they're looking for. So if there's that opposing view, a lot of people will take that opposing view as wrong, and it could be the rightest, so to speak, thing that there is, but because it conflicts with their present view, it's always harder for us to think that we may possibly be the one that is wrong. But if you ever are going to question your own thinking, do it with somebody who has been doing it longer, been around it longer, been involved in it longer, more mature in it longer, further in it longer. You're more times than not, you're going to be right to switch your thinking for theirs than the other way around. So we're building a house right now, and I'm not going to go over there and tell those contractors and carpenters and things like that, no, that ain't the way you do that. You do it this way. Why? Have I put nails in boards before? Yes. Have I used screwdrivers and whatever stuff? Yes. But am I any kind of pro when it comes to anything like carpentry wise or home building wise? Heck no. So it would be as ludicrous for me to trust my own judgment and thinking versus theirs, because this is all they do every day, all day long, and they're steeped in it. Well, what's my job? My job is financial markets, watching stocks, researching, pilfering through the news to see what's fluff and what's right, judging sentiment, all those types of things. It's all I've done for the bigger part of my life. I'm 50 now. I just turned 50 on August 31st. And, and so for about half my life now, I've been immersed in these markets like this. Well, how many people can say that? And then of the ones that can say that, how successfully have they maneuvered it? So you will find that a lot of people don't have a defined system, a defined plan of attack, a way that they consistently maneuver through markets emotionlessly, and stick to their numbers, stick to their strategy, stick to their tactics, because there's always a tendency for people to go, well, I think this one's going to do this, so I'll put more money in this, or I think this stock's going to recover good, so I'm going to average down a fourth or fifth time on this, or there's all kinds of ways of tweaking my system that is you're disadvantaging yourself over time rather than advantaging yourself over time. And that's why I've literally got, I believe it's on the Ashon page, a video or article about beware of your tendency to tweak the system, because that's a group 2 type of thought process. My goal and love would be for everybody to be group 1 people, but I know mass crowds enough that I know people choose the group that they are in. You don't have anything to do with that. Ultimately, they decide whether they're group 1, group 2, group 3. And then if they're group 3, they're going to blame it back on you, the advice giver. But in reality, what they did was they followed their own head, they followed their own thinking, they followed their own emotions. They made a decision that the advice giver didn't give. They followed their inexperience versus the voice of experience. They pulled the rug out from under themselves and fell, and then blame it on somebody else. That's what group 3s do. So the good news, you can say, hey, I'm in a group 3 and I need to move to group 1. You can do that at any moment in time you want to. That can be one quality decision away. You can be group 2 and go to group 1. You can say, you know what, I've been finagling this thing and trying to tweak this system and get an edge here and an edge there, and I'm screwing it up, and I'm going to move from group 2 to group 1. You can do that at any point in time you want. And I hope those that define themselves as group 2 or group 3, I hope that they, in fact, do that. But I do know, unfortunately, with a big enough crowd, you never have 100% participation in group 1, because some people will always think they know best, or they have less wisdom and won't follow the greater wisdom in that area, and they're always going to do their own thing. And so I know that that's inevitable, but I do my darndest to try to persuade you to stay on the straight and narrow, to stay on the road and stay out of the ditches. But some people persist getting in ditches. And again, I hate it. I don't like it. And that's why I try to prevent it. That's why I teach you differently than that. But please don't pay for advice and then not take it. Please don't pay for experience and then not take it. It would be dumb to do so. All right, that is it that I've got for this week. Thanks so much for watching and listening, and for being a faithful subscriber. When I talk tough to you and when I talk easy to you, just know that I'm for you both ways. I'm not against anybody I ever use as an example, any of this. I want every single one of them to succeed, and any single person could get into emotionalism just as easily as that person did. And so I know that. So to me, it's never personal to any one individual. But just learn from that. Let it be a reminder to you, and don't join in the emotional party. And that's it. Thanks so much for watching, and God bless. Bye-bye.